the needle on the record.
Welcome to Wage Cucking with JMO.
Welcome back to Wage Cooking with JMO, everyone. So after many requests about this, this will be the 2024 prediction episode, where we'll get the thoughts of Andreas and JMO on what's going on, potentially going on this year. But how are you guys? How's 2024 shaping up so far?
Not too bad. Happy New Year. Yeah, I've been nursing a hangover for the past few days. I'm almost back. I think I'm at like 80%, but feeling all right, ready to go.
Yeah, Happy New Year. I don't want to dox you, JMO, but I was talking to you and you said something about like a very calm New Year's celebration.
Yeah, that did not happen. That confirmed did not happen.
Excellent. So should we do some holiday break news first, or do we jump right into it?
Yeah, I mean, I feel like we've had some pretty interesting events happen in the past 24 hours.
Oh yeah.
The market took a massive dump and has since like recovered a decent portion of it. But yeah, that was pretty interesting. I don't know if this is true or not, but the rumor is it stemmed from a Matrix port researcher or intern saying that the ETFs would be declined in January.
I think I have more than you on that. So it's from what I understand, it's let's find his name. It is
Jihan Wu.
No, so Matrixport is Jihan Wu's. Is it a fund? Is it an OTC desk? I don't know, but it's like some kind of entity of Jihan Wu. And let's see, the analyst that wrote it is based in Singapore and is also no longer with Matrixport. So my friend says maybe not the highest signal person. I'm not going to dox whoever said that to me, but thank you for that. So, and I'm also in it. I believe I'm in a Telegram with this person, with this Matrixport guy, but I'm not sure. So, anyway, so I think they released a memo or report was released by this guy from formerly Matrixport, where the headline is just like all ETFs will be rejected, is my opinion, and of course, as is normal, everybody just reprints that, but they remove the says random dude on the internet part, and they just print it as fact. So I'll well, JMO, you know the reaction better than me.
Yeah, it got aggregated pretty quickly. I don't know the credibility of the source. I read through the article. Yeah, I don't really know. I'm also not even sure. Like, if you look at the timing, it seemed like the news had come out directly from Matrixport like a few hours before, maybe like a market purge of like minus 10%. So I don't even know if that was like the exact catalyst, although I couldn't find any other major catalyst. I think the main thing to note though is people were like massively over leveraged long. If you look at the funding rates for like Bitcoin, Ethereum, like a ton of other assets, essentially people were margin long on perps, paying like insane funding at the point where they were like pretty over leveraged. So like even a small market move down would cause cascading liquidations, which I think is what we saw. So I mean, this has played out quite a bit in the past, where like the market dumps, let's say like 5 to 10%, like within maybe an hour or so, and then has like a 50 to like 80% recovery, because like those assets end up getting bought up. The funding rates seem to have reset on almost every single exchange. So now it's a bit more lucrative, or a bit more favorable for people that like are looking to long assets right now that are that didn't want to pay the previous funding rates. But yeah, it just shows like I feel like maybe this was in theory like a 2% downward spot move that got like cascaded to like a 10% move because just people were massively over leveraged.
What yeah, I did look at the funding rate on Binance's reset. It's like, I don't know if 0.01 is the lowest it ever gets per the 8 hour, but
Yeah.
Yeah, because you've been pretty public in the last like few months. Everybody's asking like, are you long yet? Have you been waiting for funding, or is it just like too shaky?
Yeah, I think just as a general rule, especially so like a large funding rate for being long sort of equates to a crowded trade as well. So not only are you are you paying like really high fees to long, where it's like much cheaper, although you don't get like the same upside, but it's much cheaper just to like buy it and hold spot. You're also in the same trade with like a majority of the people, because like a funding skewed one way means like one side of the trade is like super crowded. So just like as a general rule of thumb, I think it's like not the best idea to be late to a trade that's like very crowded and very expensive to do, even if there is some upside.
Do you have if we take the major exchange actually, do you have like a certain number that you would say on say Bitcoin or Ethereum where the trade feels very crowded? Because I think 24 hours ago, it was probably, I would have said 25% per year.
Yeah, the Bitcoin funding a few days ago was like almost upwards of 100% a year.
Okay.
Which is just pretty crazy. Yeah, for like the larger cap assets, I feel like the risk reward is a lot lower, just because if you're longing something with like a lower market cap that has like less liquidity, I think that makes a little bit more sense to be paying funding if you have high conviction on it going up. Just because, like for example, you're paying like assuming like 100% on Bitcoin, it's very unlikely that Bitcoin doubles in price within a short period of time, right? I mean, it's just like historically speaking, that has like very rarely happened. But if you look at like assets, let's say outside the top 20 in market cap, those can fluctuate upwards like quite a bit to like 200, 300, 400% possibly within a shorter time frame. So the upside, if you believe in them, is a bit more in those. For Bitcoin and Ethereum, like I think I would avoid paying. I don't have an exact number, but I would avoid paying like almost any funding to along those assets, and rather just take a more conservative approach. And especially since there are like good DeFi options and stuff like that, it makes more sense to me for a lot of people to just like dollar cost average into spot, and then use those spot holdings to see return as yield bearing assets on chain, and you still have the speculation of the upside by holding those spot assets.
But I guess for Ether and Bitcoin, there's not many yield opportunities. There hasn't been for the last long while, right?
Yeah, Bitcoin is a little bit dead. I feel like we'll get to this in the 2024 predictions, but one of my predictions is that like decentralized finance on Bitcoin takes off a bit and gets like a decent portion of the market share. So I think eventually that there'll be like at least reasonable options for seeing return on native Bitcoin. Ethereum, like your best and safest bet is some sort of like liquid staking. I think like the staking rewards are like somewhere around like 3 to 5% right now, which
or 7% if you're smart.
or 7% if you're smart and you look at the right protocols. But that's still quite good, considering if you're bullish on the asset itself. Like if you think that like the asset is going to go up quite a bit, it's much more reasonable for you to, instead of like paying a large amount of funding in order to leverage your long position, to buy spot, and then to put your spot holdings into something like this, where you think like the value of the value of the token will go up, and you see rewards on the back end.
And And I guess on DeFi, you could also leverage long by borrowing stables with collateral in Bitcoin or Ether.
Yeah.
And it would be cheaper than the funding on the perps.
In theory, it would be cheaper on the funding and the perps. But I think in general, if you use the DeFi platforms to borrow stables, those especially when they're floating rate borrows, those floating rates will trend a decent amount upwards and sort of be in line with funding. So if there's demand for people to long, then like the borrow rates of stablecoins will increase on DeFi if like all the centralized exchanges, the funding rates are quite high, and then like vice versa too. Like I think we saw that today, where where like a lot of the funding on the exchanges were reset, and then if you look at like the big borrow lend platforms, it's a lot cheaper now to borrow stables than it was a few days ago.
Yeah, and I guess that is just from people. There's literally just people sitting and moving this money back and forth, right?
Mm-hmm. Yeah, for sure.
What what do you think is so moving to, I guess we can touch on the Bitcoin stuff as well in a little bit, but just focus on this DeFi yield aspect. Like, what do you think about newer chains right now? Do you think there's any yield there, or is it still being developed, like the ecosystems, like on these new L1s, basically?
Are we getting into our predictions for 2024 now?
We can.
Yeah,
Why not?
so I think one of my predictions is that there'll be multiple new L1s that maybe even haven't launched now that gain like mass adoption. Their token gets to maybe, let's say, like 1 billion in market cap. They get like hundreds of millions, if not billions, of dollars in TVL in DeFi and like on-chain related protocols. So yeah, I think I guess one of my other predictions. This is like going a little bit back to what we talked about before, or I guess what I talked about before with Ethereum. But I think Ethereum continues to bleed, at least for the first part of the year compared to other layer ones, until maybe like EIP 4844 comes out, or there becomes a new like paradigm changing use case for Ethereum, whether it's like a specific layer 2 or a specific protocol. But other than that, it just feels that like all these new layer ones with, in theory, better technology that can process transactions faster, that can process transactions cheaply and efficiently, will gain a decent amount of market share versus Ethereum unless something changes.
And I guess that goes back to sort of the triangle there, where one of the sides is decentralization, but does it matter? Do you think people will care, or is it just throughput that matters for DeFi?
I think people will care to some degree, but not to the degree where Ethereum will really be competitive. Just because like I feel like decentralization isn't on like a binary scale, whereas like a lot of the layer ones that have higher throughput, lower fees, they are becoming more decentralized. We talk about like Solana and stuff like that. Like I feel like Solana's quite a bit more decentralized than it was like a year or 2 years ago. There's more people running validators. There's quite a few different liquid staking derivatives where people can basically spin up their own liquid staking derivative and essentially run their own validators through like a third party. That coupled with the fact with like a lot of the liquid staking on Ethereum has been concentrated to maybe like 1 to 3 major protocols. Like we look at how much is staked on Lido. We look at how much is deposited on like something like EigenLayer. That doesn't necessarily bode well for like the theoretical decentralization of Ethereum compared to other chains.
What do you think about all these Cosmos chains popping up? There seems to be When you mentioned then like this $1 billion market cap, it seems there's been a couple in that range already. Do you think they're promising, or because when I've used that stuff, it feels kind of different. Like it's
Yeah.
it's a bit different to what I'm used to. And when you're trying to test it out, it's like a learning curve again. Do you think that's a problem? Do you think like they'll pick up adoption over time?
I think with Cosmos specifically, I think it's like a pretty interesting test case. I think my prediction for Cosmos is it loses. I'd say maybe it falls out of like I don't know what it is right now. Is it like top 10 in market cap? But I would think it falls out of like maybe the top 20 or 30 in market cap. And that's not necessarily like a knock on the chain itself. It's just like it's unclear of how the value of what's going on or the protocols that are using the Cosmos technology go back to the Atom token. Stuff like Celestia, Injective, stuff like that have their own native token. Like if they really take off, I feel like the value that they accrue goes back to their native token rather than like the Atom token. So um, I feel like the Atom developers or like whoever thought of this model didn't really think it all the way through. Where essentially their goal should be more to drive value back to their own native token, rather than like the protocols or the use cases being built on Cosmos. So even if like I'm pretty bullish on like Cosmos and Cosmos ecosystem related uh, products right now. I think they do take off, but I think like yeah, a lot of the value goes back to those individual projects and not necessarily like the Cosmos, the general Cosmos token.
Cool. Maybe let's touch let's move on to some Bitcoin related stuff. I know you had some thoughts about this, Andreas, about where you think things are heading. And I know it was mentioned as well the DeFi stuff on Bitcoin as well, which was touched upon a little bit ago. But yeah, Andreas, what are your strong predictions when it comes to Bitcoin in 2024?
I mean, I think we should have a Bitcoin price number January 1st next year. So what was it? January 1st, 2023. I think it was super low, maybe like
Let's check.
15K.
Yeah, it was pretty low, maybe around 20.
Okay.
Oh wait, let me just zoom out. On the first, we were at about 15 or 16K between in that
Yeah.
Wow.
ballpark. Yeah,
That's pretty.
Yeah.
This is very interesting. Time really does fly. So I'm gonna say I don't want to be pessimistic, but it's also nice if my prediction is close. So I'm gonna be conservative. I'm gonna say 80K. I think is quite.
I was gonna actually say around there. I'll
Yeah.
say 75K. I think we barely hit all time highs. I think the prevailing catalyst is the push to ETF. I feel like the ETF is very likely in the next year, unlike our friend from Matrixport or what he thinks. And I feel like it's not going to be a sell the news event, just because like logistically speaking. So the bull case for the ETF is like you have the spot ETF, and then you have like hundreds of thousands of people or entities or whatever that will have access to be able to buy Bitcoin that previously didn't have it before, whether it's like the technological hurdles or like the KYC AML situation. And I feel like that takes a bit of time to develop. Like at the point where the BTC ETF gets approved, it doesn't mean that there's like going to be like $100 billion pumped in that day in Bitcoin, but it's going to be a slow process for people to either dollar cost average or if you're like, for example, running a family office or a large fund to get approval, to figure out allocations and to slowly put money in. So I think it's more of like a a slower long-term catalyst that basically opens up another market for people to be able to buy Bitcoin, which in theory will push up the price.
Blake?
I think I'm going higher than that. I think more than a 2x from here. I like the sound of that. I don't know. We just saw some like crazy moves like in the last few months where the price just shot up like 5K a day. So I would say I'm hoping we get north of 100 this year.
Nice.
Need 6 figure.
I think so. Like a few negative catalysts, I think are likely to happen. The first being the release of the Mt. Gox coins. I feel like that will happen at least to some degree in the next year. Like I think we've already seen some repayments being made, but they're made on PayPal, I believe.
Twice.
Yeah, I did see that.
Some of them also made
works.
twice.
Yeah. I don't exactly understand how that works, but like it's clear that like we're at the point where like those coins are going to be released. And I think at some point, if the price continues to go up, Michael Saylor is eventually going to have to unwind his Bitcoin position. So basically, what he's doing is he's like taking a bunch of debt and then just like leveraging up by buying Bitcoin. So like his strategy is either to take debt or to sell more shares, and then like the shares pump in price when the price of Bitcoin pumps, but then he uses that to leverage more in Bitcoin. But like if he's not exactly dollar cost averaging in, he's just like sort of just randomly buying Bitcoin. But at some point, like a lot of that debt needs to be repaid, and he needs to take profit at some point. And now I don't know, he has like 1-2% of the circulating supply of Bitcoin. Eventually, that will, at least portions of that will need to be sold. So I feel like there are some negative catalysts that may suppress the price of Bitcoin, even if the ETF gets approved.
One thing I'm a bit surprised of is why has nobody tried to copy what Michael Saylor is doing? Or maybe people have personally, for sure. There's a lot of people doing that.
Yeah.
But this model of where you have a company that can take on corporate debt and like sell shares, and it's got a value, so that is the collateral, and you do this kind of looping that everybody in DeFi knows how to do, but in a very corporate way. Have you seen that?
It's definitely quite risky because like it's easy to say that he's doing well when the Bitcoin price is above his like average entry price. But if he's doing this and Bitcoin is like constantly dumping, which happened to him for quite some time, right? Like he was buying up Bitcoin through the last bull run, and then we saw like a -70, -80% corrections somewhere around there, and like a lot of his buys were underwater, and he was in like pretty big trouble at that point. So it's definitely risky, and then you also need to have like a very large publicly traded company where like your shares. I feel like a lot of those companies are actually like building something or doing something, and don't really have like their mandate isn't really to leverage loop on Bitcoin and abandon their core business. So like,
what about the Yahoo maybe?
Possibly.
I guess what does a MicroStrategy office look like? I'm very intrigued like what goes on there, because surely it must be like the weirdest work environment in the world. Like you're not really supposed to do anything. You just stare at a Bitcoin price all day and be like, oh cool, like we're making money, guys. Cool.
Yeah. I have no idea. Like, I'm gonna assume on there.
I'm gonna assume. I mean, I as far as I know, they still have some kind of a product that is the MicroStrategy product, but in all seriousness, I would guess it's a bunch of guys sitting there calling people to try to get them to buy shares and to give them affordable debt.
Yeah,
I mean that must be the business.
The strategy is basically just to see if they can scale it even more by like increasing the share price, selling more shares, or issuing more debt, using that debt to buy Bitcoin and hoping the Bitcoin price will pump. But eventually, I feel like they're going to need to unwind their position in some way in order to like. I guess it depends on how degenerate Saylor like really is. Maybe he really believes and will never unwind anything. It just like if Bitcoin crashes, then like he'll go to zero or whatever. But I feel like he needs to be he has like a financial responsibility to do well for a shareholder. So like I feel like that means he has a financial responsibility to sell his Bitcoin at some point.
Or does that mean you can never sell because he's such a central figure that even announcing that you're going to unwind something will basically reduce the value of the company by more than that event would have brought you in, right?
Yeah, it's possible. I mean, if he's announcing that like MicroStrategy is selling instead of buying, that's going to cause like quite a bit of a sell-off in the market, which reduces their spot holdings by a lot, but then also will reduce their share price by a lot. So yeah, it's a tricky situation to be in.
But what if you find someone better though to buy it? Like he announces that he's selling like 20% of their holdings to like the Saudis or something. Like we need some sort of catalyst like that, you know.
That is actually really good. I hadn't thought of that. Yeah, it's JMO, it's sort of like the Shiba Inu situation, if you remember. That there was one guy who just owned so much Shiba Inu, and he had bought it for nothing. You could see it on Uniswap or something. But the problem is, like, this guy cannot sell, because it's all on DeFi. Everybody's monitoring his wallet. Yeah. So you just sat there, and you just really can't do anything.
It's a tough situation, and it becomes even tougher. It seems like MicroStrategy is continuing to accumulate Bitcoin, right? So like the bigger their position is, like the bigger the focus is on what they're doing with their Bitcoin. Like I would say a few years ago, like Michael Saylor was, I mean, like sort of like a new player in the space, right? I mean, his position wasn't as huge relative, but he's accumulated quite a bit now to a point where like even them selling like 5 to 10% chunks of their holdings will cause like a massive market move down.
Yeah. Let's discuss. I know you mentioned this earlier, Jamie, the DeFi thing and what's going on Bitcoin as well while we're on the topic. So like in the last couple of years, there's not been a bunch going on, but it seems like last year things started murmuring a little bit. And there seems to be a little bit more action growing there. So what are your predictions when it comes to DeFi on Bitcoin?
I think, well, I feel like now DeFi on Bitcoin is like pretty non-existent. I think that changes quite a bit. I think it takes off with stuff like Stacks with our buddy Paul Stork's drive chain once that comes out. I think that like the whole ordinals movement sort of fizzles out a bit. At least like it doesn't. Maybe not fizzles out, but it doesn't like continue to grow and people continue to pay like these massive inscription fees. I think that dies down a bit, but those fees going to the Bitcoin market or to Bitcoin go to more DeFi protocols. So instead of like people paying for inscriptions or people paying to mint ordinals and stuff like that, they are paying the miners through using DeFi on Bitcoin, which I would say is would be a pretty big change or a pretty good change for Bitcoin. It just seems like activity like that is far more sustainable than people just minting NFTs and swapping them back and forth without like any real utility to the end user.
On Bitcoin and DeFi. I have it in my predictions also that we're going to see several new Bitcoin L2s and also probably forks. And I don't mean like Bitcoin Candy, but maybe we'll see forks of the code or the code with the coins that will have, I guess, DeFi capabilities built in. Maybe like a marketplace and a poker thing built in to the Bitcoin client. That's a very old reference for anybody in Bitcoin. That the original Bitcoin client, I believe, have a marketplace and a poker or something, or like it was at least aiming for that. No, so I think we'll see new Bitcoin L2s, if we can call it that, and forks. Uh, and I think like all other L2s and forks, the founders of these things or their investors will come to realize that the best way to make money is to make a token.
Mm-hmm.
And this will cause enormous outrage.
Mm-hmm.
And I'm going to suspect that Udi and Eric will be involved in at least some of these projects.
Yeah, I feel like this sort of goes back to the, I mean, like the history of Bitcoin is basically like the Bitcoin core developers hating everything, and then like people like Luke Dash just like complaining about everything. I feel like that will continue a bit, where if Bitcoin gets to a point where, I mean, and now they're attempting to censor ordinals and stuff like that. They're possibly. I don't know exactly what Bitcoin DeFi will look like, but if someone like Luke thinks that um, DeFi on Bitcoin is like network spam, the same way Ordinals is, and attempts to censor it, I feel like that there might be like, and maybe not necessarily a fork of Bitcoin, but like a split between like these two ideologies, and like that would lead to like more tokens, more side chains and stuff like that, and like maybe like another war where like the core devs are attempting to preserve like the initial state of the Bitcoin chain, where like the new innovations are attempting to use the Bitcoin chain to do whatever they want with it.
On these L2s and all that, what is anything being built now? Also, my prediction is Lightning will not work, and these L2s will not be built on Lightning.
Yeah, I think I think like the Lightning narrative has sort of played itself out. I mean, like Lightning's been around for what, like 5 years, 6 years now.
Probably.
I think more.
Yeah.
Maybe more, and then like the use, the transactions, like not only are they almost non-existent, but they like aren't increasing in any meaningful way. So yeah, I feel like I feel like that sort of fizzles out, or if it's not like completely dead already. I know Stacks recently has been gaining like quite a bit of traction. Like the token price is up. I feel like that they might incubate some like decent protocols for people to use on Bitcoin chain. One thing I'm curious about is how like the standard of bridging will work in terms of various assets, if you can bridge them to like a Bitcoin side chain. From like an EVM or like a Solana virtual machine, or wherever the liquidity is. I wonder like how that standard will be built out, and if there will be any issues. Like I know we talked about in the past that like the biggest hacks are on bridges, right? And this is essentially new technology, right? Like we're right now we're mostly bridging like EVM to EVM, but it seems like a pretty big technological hurdle to start bridging from an EVM to like a Bitcoin sidechain, and having like the assets hold one to one and not be exploited anyway. So to a point where that might get like built out and used quite a bit. And another thing we talked about before is like if the future is truly multi-chain, there's going to be cool stuff you can do on like multiple chains. So like if you want to execute a transaction, or you want to execute a borrow using collateral on one chain, or like an asset on one chain to trade on another chain, I don't see why that wouldn't happen with like Bitcoin or Bitcoin side chains if the new technology would support that. So I think the future is pretty interesting. Obviously, we're still early in that. And like, I don't know at what point like all that would take place. I would say if it happens this year, it's going to be like in the later part of this year. Like I don't see all these primitives being built out in the next like 3 to 6 months and gaining like, let's say, $1 billion worth of like TVL. But I eventually think that they will happen, and it'll be good for Bitcoin as a whole.
And yeah, I have it on my predictions notes here that there's going to be cross chain. I mean, like you said, this may not happen that quickly, but that there's going to be cross chain liquidity, and I believe initially between all EVMs, maybe they managed to get Solana in there,
Mm-hmm.
which means you can use collateral or one chain, or you can
Mm-hmm.
maybe you can even somehow like provide liquidity on multiple chains at the same time. I'm not sure.
Yeah.
This is difficult stuff, but we talked about this before. It is technically possible, and it will be done because this TVL liquidity leakage,
Uh-huh.
where it's being too spread out, will dissolve itself, right? It's
Did
just
you?
beneficial to everyone. But I did not consider that it will include Bitcoin. But
Hmm.
now that you mention it, I think that's natural.
There was actually a bridge that launched the other day, right, between BRC20s and Solana. Someone
Mm-hmm.
launched that. I saw like one of the Solana co-founders tweeting about it.
Hmm.
I'm not sure if it's actually functional yet. I think it is, but
Well, one of my predictions was that like Solana and Solana EVM will gain users at a much higher rate than other EVM, like Ethereum-based EVM, or the Solana virtual machine would gain users much quicker than EVM chains, and I think it's a general push towards like parallel computing versus like the current state of what Ethereum is doing. Ethereum and like other EVMs are like going to be fairly limited. A lot of the layer twos are essentially like the same or similar technology. I feel like they become redundant in a way where like, yeah, it's cool. We have Arbitrum, we have Optimism. We're going to have stuff like Blast, Darknet, ZK Sync, stuff like that. But it's not clear if they can all coexist and fight for the same market share where they're technically inferior to the new layer ones
Then
that are popping up.
then I'm gonna add to my prediction, which is there will be not one but multiple EVMs that allow for transactions to be validated in parallel,
Mm-hmm.
and that will happen by just a small modification to the transaction format, where you somehow declare, like you say upfront, what accounts you're going to interact with,
Mm-hmm.
and it's going to be sharded automatically. So
Hmm.
somebody's going to start working on that. I think multiple teams. So maybe we'll start seeing some parallel execution, not on Ethereum itself. That would take
Are you
like
saying
10 years.
like an additional L1 that's going to do this, or are you saying like Ethereum L2s that will have this capability?
Both.
Oh, you
I
think
guess
both will happen?
starting with an L1. I'm going to say, Emin, if you're out there, I know you're working on this. If you're not, you need
Yeah.
to get starting working on this, because you can have parallel execution. You just need to know uh, which part of the blockchain is
Mm-hmm.
which accounts are going to be modified by the transaction,
Yeah.
because then you make sure to not run transactions in parallel that
Uh-huh.
change the same part of the state. So this is
Mm-hmm.
doable. I'm sure there's a lot of people much smarter than me working on it. But
Mm-hmm.
and my other pushback is um, that Solidity is it's very, very easy language to program, and we have so much battle tested code for EVM
Mm-hmm.
that is working with huge amounts of TVL. And I think on Solana, um, if you just talk about Rust, it is much tougher to write, and the amount of like foot guns, as we say in programming, like stuff that is very easy to do by accident,
Mm-hmm.
where you cause bugs, where you can lose money. There seem to be a lot of them still. So, um, so
I
I
feel
think
like
we're
I
going to
feel
see
like
a lot of action on EVMs and Solidity.
I feel like that's not necessarily a huge problem. Just because like Solana and other L1s are much earlier in their life cycle. Like
Mm.
Ethereum's been around since like 2015. People have been writing Solidity code for Ethereum since then. Like Solana, maybe like 2019, 2020. That there weren't like major dApps being developed until like around then. Um, yeah, it's. I feel like it is an issue, but as more people use Solana, like if so Solana, if like my prediction that like Solana, so Solana, a virtual machine, will bring or onboard quite a few more users than EVM chains, then there's going to be more incentive for developers to, get better at Rust, to develop on Solana, and that sort of slowly long term flushes out the bugs. I mean, like, I imagine that there's going to be like a phase where there are exploits. The same with Ethereum. There are exploits, and there are like bugs and coding issues. But like as more people develop and more people use it, it'll obviously go through rough patches. But in the long term, like the technology will improve, like the code will improve, the safety and security of like all DeFi, all assets, all NFTs, whatever you want to use Solana and similar L1s for, will all improve to a point where it may be like pretty competitive to what Ethereum and Solidity do today.
Yeah, I do hope so, because Rust, the programming language, is much nicer to look at than Solidity, and there's just some quirks. There's some quirks from when Ethereum was invented that make it inefficient, and it's a bit hard to work around. So I can see that. Maybe I need to get back into coding Rust in this year.
Is that a prediction? You're going to start with Solidity and move to Rust?
I already know how to program Rust, but I haven't written that much for Solana.
Yeah, that's fair.
What other predictions did you guys have? Anything else you got written down that's strong, a strong prediction that you want to get across?
I have a few. One of them is that bridging from chain to chain will be consolidated into maybe a few protocols outside of native bridges, to a point where like a lot of the major bridging solutions we have right now will be obsolete. We'll lose like a huge percentage of their market share. Like I feel like bridging is one of the biggest issues for what we want to do today. If we really see like a multi-chain future, especially if we want to do cool things cross-chain, and especially if like not all these chains are EVM compatible. Just having like an industry standard for like how bridges work and how we can bridge securely without exploits or without hacks. Once that gets solved, I'd say it's like a winner take most situation, where like if the solution presents itself and becomes a new standard for bridging, like maybe 90% of the 95% of the market share goes to that, and then outside of just like the native bridges for each chain or each L2, the current major players and bridges that don't innovate to that specific standard or specific technology sort of like fizzle out and die. I think this eventually happens just because like there needs to be something done about like the risks in bridging, like the biggest hacks. I think like the Orbit bridge, we talk about hacks in DeFi, they're almost all of the big ones are through bridging. Like the first hack of 2024 was a few days ago. Like the Orbit bridge was hacked for like 80 million.
Last year, right?
I feel like at some point the industry is going to figure out a sort of like safe and effective bridging standard, and like the protocol that develops that will gain a majority of the market share.
And I would certainly hope so, and I hope that includes Bitcoin as well somehow.
Yeah.
And I mean, we've had Brian Pellegrino on the show. I guess Blake, you can link to that episode, because we talked about it then. Bridging is just sending a message from one chain to another. The fact that the message is an asset transfer is just one use case. So if somebody makes a way to securely send a message from one chain to another, like Layer 0 does on many EVMs, then loads of people can build bridges on top of that. It's I'm really hoping Layer 0 will come out with Stargate version 2, which is their bridge, which would use a lot less gas, because there's a bit of a gas issue with Stargate version 1.
Yeah.
And I really, really, really do hope. I know they've been working on Solana. I haven't heard any news, which is a bit disappointing. I'm sure it's very difficult, and I really do hope they will work on Bitcoin or a company like them. Make it standard. Make something open that people can.
Yeah, even if it's like a standard that can be like easily white labeled, so there can be like multiple companies that are using the same technology. As long as there's an industry standard that like everyone understands is like safe and effective for bridging, I think that's a huge step that makes like not only crypto but DeFi, like it builds a legitimacy for like quite a few other chains. Like the new L1s that pop up that like aren't using EVM, that they're using their own technology. Like the barrier to entry might be pretty difficult if you need to use a new wallet. You need to understand like how transactions work, how gas works on those chains. The difficulty of moving assets back and forth from those chains, especially if centralized exchanges don't support them. I feel like that barrier needs to be solved in some way, and there's quite a bit of money at the top where if someone solves that, they'll have a huge percentage of the pie. So the incentives are there, the demand is there. Just like the execution is the only thing that needs to happen.
Okay,
one of my
I got
other
a prediction.
predictions. Sorry, go ahead.
Okay. Justin's sun will be free and safe and moisturized and happy and content,
Thriving.
and doing better than ever. He'll be thriving. Nothing
Yeah.
bad will happen to Justin's sun this year.
And also doing YouTube shorts. He's getting really into those, right? They're pretty great.
Is he using like a voice synthesizer or something for his shorts?
I don't
Because
know.
like I remember
he's definitely using a PR firm, but I don't know if they're using a voice
I
synthesizer.
remember his English was pretty bad at one point, and now he's like speaking like perfect like Western English in these shorts. So maybe he's just like a genius and learning how to get rid of the Chinese accent.
Well,
but it sounds like he's
is.
using some like AI generated voice or something.
It sounds like it could be, but something doesn't seem right with it. It seems like it's been touched up when you hear the audio, but I don't know. Maybe he's just got like a native English speaker walking around with him all day. I don't know. But probably got an army of them.
Okay, Jemo, next one.
Yeah, continuing on predictions. I have a few more. One of them being the RWA narrative, like sees a bit of pushback and fizzles out quite a bit. I think like my concerns are that a lot of the assets that you want to bring on chain, like whether it's like U.S. Treasury bonds, whether it's debt, whether it's like stocks and stuff like that, there's going to be quite a bit of legal restrictions, especially like if it takes off. Like if I envision a future where there's like $1 billion of U.S. Treasuries being traded back and forth on chain, like I can't think that like the U.S. isn't going to do anything about that and just like allow that to happen, right? Like they're pretty protective of their currency, of their bonds, and stuff like that. So. Yeah,
I thought it was a thing. I thought it was a thing where you would just want people to hold that regardless of who you are, because it's your debt.
Yeah, that may be true, but like for the reselling of these assets and for the trading of these assets, I feel like that's going to be regulated in some way. Also, if you think about it this way, if the assets are traded back and forth on chain without KYC, like we talk about like in the past episode, like Binance got in a lot of shit because they were facilitating like accounts for say terrorist organizations or something like that. Like I feel like the U.S. government might not be happy if suddenly like Hamas owns like a certain percentage of U.S. debt and it's like buying it on chain. I feel like that might lead to some issues, but it's not necessarily limited to like U.S. Treasuries. I'm just thinking like a large cap like S&P 500 stocks and stuff like that. Like those being traded back and forth. Like I know you need like a brokerage license in order to trade them in the U.S. So by allowing people to trade it back and forth on chain and stuff like that, sort of foregoes that, which I don't think like the regulators will be happy with. So I feel like at some point there's going to be a regulatory push against real world assets to a point where it becomes increasingly difficult for the companies that are specializing in bringing these RWAs to chain. They'll have some issues in the future where they may have to shut down, or like it won't be as lucrative. That they may have to jump through these like legal hurdles, pay a bunch for legal, and the upside will die down a bit. And then I think in general, the whole narrative, the demand for them will sort of fizzle out from what we see today, which is like a lot of at least hype for them to come to chain right now.
Yeah, keep going.
Let's see what else I have. Are you guys out of predictions or?
I
Let me have a look at my list.
I'm gonna say that Mt. Gox will not pay out the Bitcoin this year.
Oh wow! Well, I'm predicting that they will in the next year. I think we see some closure, but I think that's an interesting one. So one other one I have is DEX volumes will gain quite a bit versus the centralized exchange volumes. I think like the DEXs that we have now or that are being developed are getting refined quite rapidly in a way where you can eventually be able to do essentially whatever you want on a DEX, and it'll be like very similar, if not the same, user experience, safety and security. And then also there definitely is like a certain percentage of the market that are willing to pay some sort of premium to not have to interact with a central entity in order to trade. So like stuff like GMX, DYDX, like Jupiter on Solana, anything that's like building new trading primitives, whether it's like perpetuals, leverage, like options, trading synthetic assets and stuff like that, that add new use cases. And also, I think that like a lot of these DEXs are either being built on like Ethereum layer 2s that have like a higher throughput, or like alternate layer 1s. So like for the more sophisticated trader that cares about stuff like latency, and they don't essentially they wouldn't enjoy the DEX experience in an Ethereum base layer. They'll have far more options where they may move a lot of their volume from, say, something like Binance to something like a modified version of Cosmos, or like a Solana DEX. And I feel like maybe centralized exchanges will hold their market share in terms of volume. But if there's like a pretty big bull run where volumes go up quite a bit, the majority of those volumes and the fees paid will go to on-chain products rather than centralized exchanges.
I think that's I completely agree with the prediction, and it's really nice because if you think about it, when you're using a centralized exchange and you go to the form to withdraw your money, you always, when you click the button, you always know there's a chance that it's going to be like, oh, we need to refill the hot wallet, or you have some kind of a limit you didn't know about. We got to ask you some questions. There's like something going on. You always have this thought, no matter how long you've had your account on all these exchanges. It's just the way it is. But when I use these, the DEXs, even like the perp DEXs, I don't actually know how decentralized they are or not, but I feel much better clicking the withdraw button on these DEXs than I do on a centralized one. And I think that's a huge deal because everybody feels like this. Yeah. And that would be great, I guess. I mean, at some point, we will move into a world where you just have stablecoin issuers who can take a wire transfer, and then that's it.
Yeah.
I mean, it could take a long time, but it's very positive.
I think if you think about it, it's the entire point. Like, if you think about what we're all doing here, it's like the entire point of the future of crypto is to be able to do as many things as you possibly can in a decentralized way, where it's like trading assets back and forth, like trading perpetuals back and forth, being able to use margin on like these markets. I feel like that's the entire purpose of crypto and what we're building towards. And like the technology will only get better from here. Like if we look at like the first DEX that came out in like what 2016 or something like that, like that's only like 6-7 years ago. Look how far we've come. And then like
it's amazing.
I feel like the technology moves in like a logarithmic way, whereas if there's more demand for it, there's more funding for it. Like people are going to build up this technology like at a much quicker rate. So like your average DEX in like 2000 at the end of 2024 might be like a completely different user experience than what we have right now.
At the like you said, at the current rate, they are innovating so fast on the DEXs, and especially the perp DEXs. I don't use any option stuff. They're innovating so fast. They will surpass the user experience of Binance this year. The user experience of Kraken has been surpassed a couple of years ago. But what has Binance been adding lately? There's like, it's a perp DEX,
exactly.
They have cross margin, all this stuff, and they've added like T-WAPing. Dude, these DEXs can make T-WAP functionality in like a weekend.
Yeah, and I feel like the point there is I feel like there's definitely an upper limit for the centralized exchanges, like how much they can really innovate. Like if you're running a centralized exchange, you can only do so much. You can add some cool features and stuff like that, but I feel like they've been around for like about a decade, and they've integrated like all they can integrate. Like there's definitely someone at Binance or like a team at Binance. They're just like, how can we add features to our exchange to improve the user experience? And this has been going on for years and years and years. So eventually, I feel like they're going to run out of like good ideas and start just adding stuff just because they have to, or just because they can. Whereas like on DEXs, I feel like we're sort of in its infancy. Like we've had DEXs for a while, but like a lot of the DEXs that like are really good technology right now haven't been around for that much time, and they have like a decent amount of room to grow.
How long until a Binance listing doesn't mean anything anymore? Do you remember when Coinbase listings stopped mattering so much? That was like a thing for a while.
Yeah.
When will that?
I feel like that's a pretty good prediction, that like centralized exchange listings will matter less and less for price.
Yeah.
Like, it's true for the past like 5 years. It's become like less and less important. Like, if you look at like the assets being listed on like the major exchanges and like the pump because of the listing, they've gone down quite a bit over time. Where like in 2017, if you got listed on Binance and you were some like obscure shit coin, your coin was going up like 1,000% no matter what. Whereas now it's not necessarily the case. I guess also the listing procedure is a bit more refined now that we understand like what tokens and digital assets are. Like a lot of exchanges aren't just listing complete garbage just because they have like some volume. Although a lot of the meme coins now are being listed on major exchanges, so that might not be completely true. But yeah, I feel like once liquidity moves to DEXs, like the whole we got listed on a centralized exchange, therefore like our token is more valuable thing sort of dies away a bit. I have one more prediction actually. My final prediction is that stablecoin volumes on Ethereum drop out of the top 5 in total transactions next year, in terms of like total transactions versus like other chains. Like the general thesis, like now I think it's like second or third. Either Tron or Solana is higher based on the given day, but I just feel like there's a group of people that aren't using decentralized finance, that are essentially using blockchain as a method to transact dollars back and forth, that need like the cheapest and most efficient way. And a lot of these, like we talk about like these parallel computational chains, like the ones with higher throughput, the ones that you essentially pay little to no gas to do these transactions. At some point, it's not going to make sense. Like even today, where gas is low, you're still paying like $4 to $5 to make a transaction, which is like okay if you're making like $100,000 transaction. But if people want to start transacting like a few dollars on chain using stable coins, like if I want to buy a coffee, I know it's an old meme, like eventually you'll be able to buy coffee with your Bitcoin, but in theory, it's a use case to be able to have a stablecoin wallet and just like go to a shop and like buy a coffee. It's not pragmatic right now on Ethereum, and even a majority of the Ethereum layer 2s, it's not pragmatic. And even if like Ethereum improvement protocol 4844 comes out, like I still think after that, like the Ethereum base layer won't be pragmatic to send these like smaller transactions. So eventually other chains will see the demand for that and capture that market share to a point where the only major stablecoin only transactions that happen on Ethereum are either like DEX swaps or like these large, institutional grade, like 6-7 figure transactions, and everything else will be on other chains.
I think if that's all the predictions, I think that's really good. I mean, if you think about, I mean, we didn't. I was going to ask what you think is going to happen with Aptos, Sui, Linnea, like all of these Solana killers.
Yeah,
but maybe even relevant.
If I had to make a prediction there, I would say like at least a few of them would gain like a pretty big market cap. Like I talked about earlier about how like 2 new L1s would get a $1 billion market cap. I think I don't know the market cap of all those right now, but I'd say out of like the basket of like Linnea, Sui, Aptos, like Monad, Say Network, at least 1 or 2 of those will gain like a $1 billion market cap as well.
Well, I mean, in that case, you should just go ahead and buy all of these shit coins because Sui is like 75 on market cap. So
yeah.
Okay, that's interesting. No, I was just going to say these are very positive predictions. I like that. Like everybody guesses that Bitcoin will go up in value and we'll have more functionality, more DeFi, less TardFi assets on chain.
I feel like maybe the predictions are a bit like too hopeful or optimistic. I mean, like hopefully it's not stuff we want to see, but stuff that actually happens. So for the listeners of this, I guess take our predictions with a grain of salt. No one's promising all-time highs in Bitcoin at the end of the year.
I am.
If we don't hit an all-time high, you can send the invoice to Andreas.
Yeah,
so he'll cover the difference.
Your liquidations.
Yeah, just send me your Binance bill, or send me your Rabbit X bill. I don't know what the future holds.
Cool. Let's call it a day there. Thanks, guys. Appreciate it.
All right.
Thank you.